Ladies and gentlemen, thank you for joining me today. This is your host, Brian, at Bitcoin Summer. Feels like it's been a minute, but it's only been a week. Let's jump right into what we're going to be talking about today, and that is the Lightning Pool. Now, Mike 11, who works at Lightning Labs, had this great post about a step-by-step on how to set up Lightning Pool. Now, I've seen this on the Terminal app, and I've always been curious about what the functionality of it is, so I decided to take a dive into it. And at first I was a little bit concerned because I thought maybe my node wasn't ranked high enough, and we'll go into that in the tutorial. But you do have to have a tier 1 ranked node in order to participate in this, but if not, you can go back to my previous node setup and channel setup and fee setup management videos and just follow everything that I did, because that's all I did to become a tier 1 node. So you can do it too. It's super easy. It takes some learning and it takes some patience and progress. But once you get it down, it's pretty simple. And there are certain concepts. If you wanted more details into that, shoot me a message and I'd be happy to share some of my tips further. But what I do want to talk about today before I jump into the tutorial is, why would we want to gain yield? Now, some people don't mind just sitting on their Bitcoin. Now, some people might see it as it's such a long-term play that it would be nice to earn some sats in between there. And if you're going to be opening up channels, if you're going to be doing certain things on the Bitcoin network, it costs sats. So it's nice to recoup some of those expenses that you incur upon setting up a node. So where my brain went back to originally when I saw this post by Mike 11 is a concept by Preston Pish about how our treasury yields, which is the risk-free rate, that's what it's called. The risk-free rate is used to generate stock or asset valuation. Now, let me show you this, and I don't want to bore you with old textbook material, but this is the required return on a common stock, and this is using the capital asset pricing model. Now, I don't need to get too complicated with it, but here is the equation here, and as you can see, the risk-free rate actually determines at least that's the way old school traditional finance is concerned. Risk-free rate is the way to determine the value of a stock or any sort of asset. Now, when your risk-free rate is broken, and by broken I mean the Federal Reserve is buying their own treasury bonds in order to suppress the interest rate, the treasury rate. And because when the price of those bonds go up, the rate goes down. So what is happening right now is the Federal Reserve is actually suppressing the interest rates. And so when that happens, the value of everything, of assets, moves up dramatically. So when we have a broken base for valuation, that leads to broken valuations, which is why we see this crazy run-up, multi-year run-up of the S&P 500 and every stock and every asset, housing market, everything. And what Preston, and I do mention Preston a lot on this show, but highly recommended to check out his podcast, the Investors Podcast. But that's where I gain a lot of my knowledge as far as traditional finance goes. And like I have mentioned on this before, I was listening to that podcast before I even got into Bitcoin, and he's the reason why I got deeply into Bitcoin. So I do have to credit him a lot for where I'm at right now with the asset. But when I first saw this post by Mike 11, I was so curious because I was like, Preston supposes that possibly one day the routing fees that you earn from your node could potentially be the risk-free rate in which we value our stocks on, or our homes or our assets. And this is such an interesting concept, and it's stuck in my brain, and he's been on this for quite a while. But, as far as setting my note up right now, it's not the percentage that you would desire if you say we have traditional or normalized interest rates. Let's say you wanted to earn somewhere between 3 and 6% on your money that you store. You're not going to be making that right now on the Lightning Network. Some people can. They're very early established. Their nodes are centralized as far as the centrality ratings are very high for them, or on the low end. It's actually the lower the rank, the better. So what that means is they were in early, and therefore they have a great spot in the ecosystem. Now, I imagine that this is going to get better and better for me as my node matures, and there's chatter on the network, and when there's chatter about your node on the network, you get recognized quicker for certain routes. Now, when I saw this, the Lightning Pool, this blew my mind up, because right now you could earn what it says right here, 6 to 7% on your Bitcoin that you post up, or 5 to 8%. And so I've been playing around with it, and it's not quite that extraordinary yet, but as Michael promises here, it is getting there, and demand is increasing, so getting in early on this might be a good thing to do. So I'm going to go through step by step how you set up and put your sats on Lightning Pool to earn potential yield. And I did have a success, and I will walk you through how we do that and how many sats to put on, and how to set your your rates. So without any further ado, we're going to jump right into it here on Bitcoin Summer. They price this out of the housing market. They price this out of the education market. They price this out of the stock market. They continue to price this out of day-to-day goods. We need to take this back, and this is our time to do it. Okay, so what I'm going to do, I'm just going to follow right along with this thread here. It's the easiest, best explanatory way to do this, and this is what I followed, so it does work, and Michael's doing great work over there at Lightning Labs, so give him a follow at Michael11. So this is a non-custodial way, a trustless way to possibly earn yield on your Bitcoin, and that caught my eye right away. That's a great feature, because when it potentially could be a risk-free rate, we need it to actually be risk-free. Now, trustless is the best way to go when we're talking about risk-free. And I don't have to trust somebody else. I can trust my node and the consensus rules to keep my wealth safe. It's not in super high demand, so you might be sitting on these sats for longer than you'd like. So you're not really going to be earning these rates that are advertised, because those rates are if you were constantly recycling those sats at the same rate. And that's the same way that goes for when you're analyzing your returns on your stocks or your investments. When you annualize it, what you're doing is you're actually saying, I can take this money out right now and earn the exact same amount after I sell that stock or that bond or whatever you're valuing. So annualized returns, especially if you're doing it less than a year, you're making up math, because what you're really doing is just saying how much, if I held this for a year, how much would that equate to? But the hard part is if that asset performs super well over a short period of time, let's say less than a year, and you try to extrapolate that out into a year basis, you might not be able to earn that same yield. So let's say you earn 10% annualized in a 3-month period, but you sold it And then, but the only option you had was to put it into a 3% earning asset. That's not earning 10% that year. So just a caveat there. But what I do like about this is if the network shows a desire to borrow this liquidity from others, and the demand ramps up and ramps up and ramps up, you will start seeing quicker fills of your orders, and therefore you'll get closer to these 5 or 8% levels. So I just wanted to show that as a caveat. But so like I said, before we jump in, so we're gonna do an ask order on this tutorial, and you can also do a bid. So if you want to go into Lightning, if you need inbound liquidity on your node, you can go into Lightning Pool right now, and you can purchase from me because I have sats up there. The ask is your ask how much you will receive from the bidder in order for them to use your sats as inbound liquidity. And what it will do is kick sats onto a channel that opens when your order is filled. The channel opens, and your sat liquidity will be pushed into that person's node, and therefore they will have inbound liquidity, and you will have an outbound liquidity channel. On the seller opportunity, like I said, 5 to 8% APR, and like I had mentioned twice already, they expect the demand for the channel leases to increase rapidly. So that's a really cool suggestion there, because like I said, you might be waiting a little bit as far as getting these asks filled. So again, you need to be a tier 1 node. That's a tier 1 ranked on Terminal Web, and you can find that out. I'm going to have the website right here and in the show notes as well if you're listening on the audio version. You can and should explore earning yield on Pool by selling channel leases, and yes, I will be showing you how to do that on this video. Buyers, like I said, can lease inbound channels from tier 1 nodes, and the sellers can lease out their capital to earn yield. And also, this is going to be expanding the graph of the network and making the network stronger. So another amazing feature. You just need to be running the Lightning terminal, and I'm an Umbrel user, so I just open that up right through my Umbrel. And you need to, like I said, you need to be a tier 1 node, and you just need to be ranked. And that just means having there's a couple different I'll show you right here. You'll have a couple different checkpoints that they'll do, and I think it's 6 checkpoints. And what they'll do is just rate you through those checkpoints, and if you get rated highly enough, you can be a tier 1 node. And I don't do a ton of routing. I do probably 1 or 2 average a day, 1 or 2 routes a day, and that's up from I was doing maybe 1 or 2 a week. So even mine has improved since July, since I set up my node. And like I said, when I first checked this out, I didn't think that I was going to be a tier 1 node, but I am. So I know that you guys can do it out here. Like I said, check out my old videos on setting up channels and setting up your fees and setting up channel partners, because I just followed my own steps and I became a tier 1 node. So, and then you got to set your account up on Lightning Pool, which requires you to deposit sats onto the Lightning Pool. So they'll hold a kitty for right around 2 months, and that's in block time. What you can do then is from that little kitty that you hold through on the Lightning Pool, you can create your ask orders through there, and it'll just drain your account balance if you have certain ask orders. You'll see for each ask order, it'll take your balance out right here. And it's just a simple accounting program, and I'm assuming they're going to streamline this app even better. There's some functionality on it that is a little difficult to navigate through, and I will be having a conversation with Michael Levin possibly about some of my tips, and if you guys have any tips out there as well as far as what you'd like to see as far as functionality goes, let me know and I'll pass that along. So let's place some ask orders, and this thread assumes sellers looking for yield. So you'll want to submit an ask order to lease out the coins for a certain period of time, and that's expressed in blocks. It's not in actual time. And that's at a fixed rate, compounded per block. So that's what I was saying before about it's not compounded annually, it's compounded per block. So you're not guaranteed to earn that rate that you just earned on that order that got filled. So that's what I'm saying about once the demand starts ramping up, you'll start seeing those come more in line with what your actual APR is for each one of these ask orders. So let's say you want to lease out 4 million Satoshis. So just toggle to the Ask tab here, and you fill in 4 million, obviously. And you offer that as outbound liquidity. And that just means you're giving somebody inbound liquidity. And you can set your own premium, so you can set your own yield. And that is done with the Ask premium here. And it goes by sats. And if you want to go above or below that, so if you want to go below that, you might be able to get in quicker ahead of people because you're going below market rate or current market rate. And this fluctuates quite a bit. So I've seen it from right around 15 to all the way to 100 or 200 or 300 basis points. So that is something to keep in mind. It's wildly fluctuating right now because there isn't a ton of liquidity going on in the markets. There's not a lot of orders going through. So like I said, once that starts ramping up, you'll start seeing that more in line with what you're going to be paying or what you're going to be receiving. And so the default, the lease duration is 2 weeks or 2016 blocks. Now, he says possibly this can be extended out. So I don't see that functionality right now. So that would be a cool thing if you wanted to lease your sats out for a little bit longer period of time than the 2 weeks. But what happens after the 2 weeks, you get your sats back into your little kitty, and then you can do another ask again with those sats. And so that's a pretty cool feature. All right, we're going to log into Lightning Terminal here. Submit, and we're going to go to the pancake at the top left. Lightning Pool, open that up. We're going to check if we are a tier 1 node, and sure enough, T1, we are a tier 1 node. And you can see the UX here. It's pretty straightforward. Next step is to put in the amount of sats that you would like to offer. And I'm just going to start with 5 million here. Now, I don't know exactly. You can kind of see orders going through as you'll get to know the system. So I haven't gotten anything over 2 million sats yet. But it would be nice to just get one big order done out of the way. Therefore, I can recoup some of my expenses. But as you can see here, it'll expire in 12,960 blocks. Confirmation will go in 6 blocks. So watch out here, unable to create the account. And that's because I hit it twice. So just be careful there. So you'll see your pending open here, and you can go check out on the mempool where it is. And like I said, it's not in. It looks like I overpaid, though. Oh, yes, I definitely did. So it was a little bit busier here. And just be wary of that. I tried it again later when it was 1 sat per byte, and it was a lot cheaper. So try to do it that way. Do it nights and weekends is probably the best way to do it. So we're going to wait for this to go through, and I will meet you on the other side. Okay, now we have our account funded, and I have 5 million sats in the account. It says account status open, and that's when you know that you are ready to put an ask order into the system. And as you can see here, just real quickly, these are the orders that have been fulfilled so far. So as you can see, these big numbers here are the basis points that have confirmed. And so these are kind of where you're going to want to shoot around, I would say. And you can see the actual sats that went through too, when you click on the top right pancake. So you'll hit your ask button. Now we're going to set up our order, and I'm going to try right away for 5 million sats. I'm going to do the suggested amount at 16 basis points. As you can see, it just goes off of what the last order was. And that will be at an APR of 4.16%, which, as you may already know, that's way better, much, much better than you would ever get in a savings account. But there is a caveat to that actual 4.16%, because that is assuming that you can get that order filled again right after it closes. So you got to watch out, because these additional options are the ones that they set in. And as you can see here, I had the maximum fee at 100 sats per byte, which ended up being very expensive to fund this channel. So let's place the ask order. So I'm not able to do this because you're not able to go all the way up to your pool account balance. So just dial that back a little bit, and I just went, I'm going to do it for 4 million sats instead. And again, you won't be earning that APR because you're not going to be putting all of your sats out there, and they won't all be bid up at the same time. So it's just going to be very hard to get to that 4%, but even coming anywhere near that is going to be great. And like I'll show you later that I even beat that 4% rate. So anywhere near that's going to be fine. And are these later on going to be our risk-free rate when we're going to be valuating assets? It's going to be interesting to see down the road. So here it is. The ask order is in. And now we wait, and we'll see if that gets filled. So this 4 million sat ask order is not going through, although there are bigger orders for more sats going through at the same basis rate. And so it's just interesting to see what actually gets filled and what doesn't. As you can see, there were 15 million sat orders that got filled, but my 4 million order did not. So there are other factors at play here. So I'm just going to continue to play around with this, and if I come up with any cheat codes, I'll let you guys know for sure. I'm going to do another ask order here and just change my parameters just a little bit. So as you can see, I'm going to go more in line with a previous order. I'm actually going to go up and go with previous order of more like 20 or 19 basis points instead of the 16, and try to do it that way, because there were other orders filled that were around those amount of sats. Okay, so that one didn't go through either, and in fact, no other volume has come through at all. So now that the volume I've noticed that has slowed down a bit, I want to lower my ask for sure. So we're going to go in again, and we're going to do 4 million sats again. So what actually ended up working for me, I had a fill here, and what actually ended up working for me is splitting my larger batch orders up into smaller bits. And if somebody did want more volume than what you're offering them, you can actually, they can lump them together. So look at what I did here, though. I did the 100 fee limit, 100 sats per byte, and it charged me 27 sats per byte. And what happened is I paid more than what I earned. 6,496 is what I earned on this order, and I paid 11,925. So like I mentioned at the beginning of the video, make sure you're setting your transaction fee maximum at 1 sat per byte, because it doesn't matter when that order fills. You're not going to be making a profit. You're going to be actually losing sats if you're going to be doing it this way. As you can see, everybody else's order is at that 1 sat per byte, and mine's the only one that got filled at that 27, which is probably why it went through right away. And I did get a higher basis point than what I actually asked. So that was at a 6.77% APR. So at least there's that, but I did spend over that to earn. And so I'm going to definitely rectify that on future orders. I do have a pending batch, and I have deposited more into the pool account just so I can get more different orders up. But this is a success as I see it. And, I'm going to save you a couple sats by giving you these tips. So when you're going to be going in, go under those view additional options. And what you're going to want to do is switch that 100 sats per byte, which is the default. Let me show you this transaction that went through. Now, it took 2 of my orders. It took a partial fill that I had for $3 million. For $500, they wanted to have inbound liquidity for $500,000, and I had a $2 million sat order filled as well, and that's what got me to this 6,496. And so these are my channels that opened up. It did it in 2 separate channels. There's my 2 million. There's my 500,000. And as you can see, I overpaid by 3 times the going rate. And that's because I put too high of a maximum on my fee limit. And so I spent quite a bit getting that opened. And so that's not great. Hopefully I can try to earn it on the other end and set my fees for these channels that open up to me. If they want to route through me, they're going to have to spend a little bit. But also, I'm just testing things out, so I'm probably just going to leave it at a low rate because, I want to, I want them to benefit from this transaction as well. It was my screw up, so I'm not going to gouge them. So what types of people are needing inbound liquidity? So this node is obviously very new. It has a very rapid growth rate, so probably just establishing. And they're probably just in need of some inbound liquidity. So they felt that they should pay or wanted to pay a little bit for that. And it's really great when you're starting out to just pay for inbound liquidity, because then you don't have to go chasing for it. And you do want a balanced node. So to balance other channels out, you might want that inbound liquidity if you're just opening up with peers that aren't opening up back to you. So those are the types of people that are going to be looking for some inbound liquidity. Other use cases for inbound liquidity could be vendors that they've taken in so many payments that they have drained their inbound liquidity out, and they need to fill that up again. So they'll just in convenience's sake, they'll just pay for that inbound liquidity. So that makes sense too. Okay, so my recent account funding went through, and I have an available balance to put out ask orders for just over 6 million sats. So I'm going to set out a bunch with a bunch of different combinations of APRs and basis point levels. But I'm going to set them all at 1 sat per byte fee limit. So on chain, I'm not paying a ton, and I can recoup some of these expenses that I burned on my first transaction that got filled. And so my first ones were, right around 7% APR. And obviously I didn't earn that. I had a negative because I didn't do it with a profit. So I'm going to set this with the additional options. I'm going to set this to 1 sat per byte. And you can also do a minimum channel size. So that's interesting. So you can have, you can offer 1 million sats, but you can have a minimum channel size so they can't open for less than a certain amount. So if you didn't want a channel on your node less than, let's say, 500,000, you can put that in here. And therefore, no one can put like 100,000 sat channel on your node. And that might make sense because you're not going to get a ton of traffic through 100,000 sats. It's just too low of an amount. So definitely tinker around with all of this stuff as I did. And I like to put out a bunch of different basis points. I like to go above and below the going market rate, because you never know what you're going to snag, and just wait and see, and then kind of change some of them out if you feel that they aren't working. You do higher or lower sat amounts. I'm still playing around with the system, and I'll give you guys updates as far as what I find out, what works the best. So in wrapping up, I just want to emphasize here that there are so many different things that we can do with the Lightning Network right now. We are in such early innings that it's an exciting playground to play around in and make sure that we are exploring every different caveat that the Lightning Network has to offer. This is why I know we're early in the development stage of Bitcoin and the adoption stage, because we are still establishing market rates, true market rates for, what will people actually pay for your liquidity. When you establish yourself early as a functional node, you can become more and more profitable as time comes on. And your node space becomes more and more valuable as you become more and more entrenched into the system. So with that, I'm going to sign out. Thank you for joining me today. This is Brian at Bitcoin Summer, and we will see you next week.